Let's go with what's happened overnight. After the close, they did the reserve requirement ratios, this time 50 basis points. Rubini, Stephen Roach, talking to you later on in the next hour or so, both say we need an interest rate rise, not these reserve requirement ratio rises. Are they right?
Well, I think they are right. We also expect one more rate hike for the rest of the year and two more for next year. But we don't suggest to hike interest rates too aggressively because that will have some negative impact on the economy.
What do you think is the net result of this happening? You all know that an interest rate rise takes about 6 months to get into the economy. Thereafter, it has the impact. Okay, we're putting money out of the economy, but China has clearly got a debt issue in some parts of China. There's also the concerns about an overheating of some parts. I mean, what do you think, as an economist, this is really going to have? What impact?
Well, I think the most important impact is from the loan quota. It's not from triple hike. It's not from interest rate hike. So that's something we should closely watch. Two numbers. The first is the 16% M2 growth target. Second, perhaps the 7 to 7.5 trillion annual loan quota. And the PBOC has been very serious about these two targets.
What's the PBOC's thinking? Is it to deal with the property bubble, what they see as a bubble maybe?
Well, I think they believe there's a small bubble in top-tier cities, and they have three goals this year or next year. The first, to stabilize property price. Perhaps they want to lower the property price in some top-tier cities. Second, to stabilize consumer goods price. Third, to stabilize growth. So anyway, I think the key word for us for the next couple of years during the power transfer period is stability.
And will that happen?
Most likely, I think it's yes, of course, the road to stability is not so easy. So that's why they have been doing a lot to stabilize property price. So far, I think now they made some achievement. And then for consumer price, I think, well, they're yet to make more achievement because inflation pressure is still high. And then for growth, as you know, there's a lot of concerns about hard landing in China. But we believe that most likely we will expect soft landing of growth from 9.7% growth in the first quarter to around 9% in the second half this year.
Now, it's almost impossible to answer this question. When will the next interest rate rise come from? Everyone predicts it was the Dragon Boat Festival weekend or any weekend when there's a holiday. Now they're saying it's not until after the 90th anniversary of the Communist Party in July. I mean, at Merrill Lynch, what do you guys sit around and do? Do you just say, you know, scratch your heads and say we can't predict this?
Well, first, we only expect rate hike for the rest of the year. We really want to avoid speculating too much about like a rate hike this weekend or next weekend. But if we have to make a bet on this, we will expect rate hike in the third quarter this year. We actually suggest our clients not to spend too much on guessing. That's a rate hike this weekend, next weekend, or after the 90th anniversary of the CCP, like in the beginning of July.
Inflation, 5.5%. Some economists say it's now peaked. Do you think it has peaked?
Oh, not yet. In year-on-year terms, definitely we will have a much higher number in June, above 6%. We expect it will be somewhere between 6 and 6.5%. That perhaps will be the peak. And
that's quite a high level, isn't it? 6.5%. That's one of the highest forecasts.
Well, not really. I think now the consensus is that for June, the number will be above 6%. Perhaps I think the market has not paid much attention to that. But most likely will be a reality. And it's not a trick because in June there will be a low base. All the numbers we are talking about is year-on-year. And last year there was a crash of vegetable price in May and in June. That's why this June definitely we will have a higher number.
Ting, China economist, thanks for joining us from Bank of America-Merrill Lynch. There you go. Markets, pay attention. It could be reaching 6 to 6.5%.